Hello everyone, I'm Dr. Swati welcoming you in the global online platform. So today we are continuing with our target of 1000 MCQs. Okay, and this is part 3, and here we are taking the 50 most expected PYQs and MCQs, and we are starting from the basic to advanced, and this is a super fast revision of the entire syllabus. Okay, so let's start. Yeah, before starting, I will like to tell you there are new batches has been started from the 3rd of the May. Yes, this is the 3rd of the May. And here you will get complete course of the commerce and management, daily live lectures, full syllabus notes in the PDF for PDF folder, and full syllabus mock test, more than 4000 MCQ series, and the PYQs with explanation. And here you will get paper 1 is free of cost if you register yourself for the paper 2. And here Global Online provide you 20% discount, and so in this amount you will get paper. If you register for paper 2, you will get paper 1 is free of cost. And yes, and the contact number is given in your screen. For more detail or more discount, you can get in touch with this contact number. How to download the Global Online? So here is go to Google Play Store, download the Global Online app, and register with your mobile number, and go to My Course and search the whatever course you want about the commerce, the paper 2 of the commerce and management. And after that, all the for you the data, all the materials, all the videos, recorded videos, you will get in the proper unit wise folder and in the systematic way. Okay, so hope so you are joining our global online class. Let's start with first question, that is 10 and 1. We have completed 100 questions. Now it is a 10 and 1. The holistic market is an approach to the marketing that include option number 1, integrated marketing, social responsibility marketing, and the relationship marketing, and all of the above. So what will be the right answer for this question? Yes, all of the above. Because the holistic marketing is cover the integrated marketing, social responsibility marketing, and the relationship marketing. That means holistic means everything matter. Okay, so that's why option number D is correct over here. Next question, which is 102. The succession plan is more relevant to top level management, middle level management, lower level management, and all are the correct. So what will the right answer? The succession plan is related to what? So here the succession plan is what? Is a process you use to identify the replacement of the high level of position. It's helped increase in the availability of the candidate prepared to fill the critical role. Okay, and when your senior leader leave or retire. So here the succession plan is related to your top level of management. So option number A is correct over here. Now the next question, 103, as per section 55 the Company Act 2013, the redemption of the preference share can be made. Option number 1, out of the profit available for the dividend. Option number B, for the issue of the new share. Option number C, partially from the available profit and partially from the issue of a new share, and all are correct. So what will the right answer for this question? You know that in the company's act, in the company act, they're having a section of 51. It's the conditions, and it's related to the redemption of the preference share. Okay, so the redemption of the preference share is given out of the profit available of the dividend. Okay, it's out of the profit available for the dividend, and uh, it's also from the issue of new share, and is also partially from the available profit and partially from the issue of share, and all of the above is the right answer over here. So the D is the right answer. Clear? Now the 104, monthly pension on the retirement. Monthly pension on the retirement is exempted income, is income from the other sources, and is a taxable under the head of a salary head and the casual income. So monthly pension income on the retirement is what? The pension is a taxable under the head of salary in your income tax return. Pension are paid out periodically generally in the every month. That's why the pension is also included in our head of the salary. Okay, so that's why it is taxable under the heads of the salary. Clear? So the option number C is correct over here. Now the next question: which of the following is a form of the pronex for foreign uh, promic communication? Okay, promic communication. So what will the right answer? Bodily contact, eye contact, appearance, and the surrounding. So what will the right answer? Promics communication. That means it's a promics is a study of how space is used in the human interaction. Okay, what is the meaning of the promics? That means how the space is used. When do you interact with A is interacting with the B, how much space is used? That is a promic. Okay, so here is eye contact, appearance, surrounding. No, when it is about the space, it's a bodily contact. Okay, so the right answer is A. Now the next question: export minus import, export and import hai. Okay, Exim Bank of India was the setup on the when Exim Bank of India was set up 1st of January 1982, 1st of April 1991, March 1st March 1970, and the 1st July 1987. So Exim Bank is established in 1st of January 1982. Okay, when it is the 1982 1st of January. Clear? So option number A is correct. Next question: the primary focus of the management by the exception involve around the organizing, staffing, directing, controlling. So the primary focus. So the question is about the primary focus of the management by exception revolved around what? The option number what is? What is management? So management by the exception. First of all, you have to understand this terms, that is the management by exception. Means looking at a financial and operation result of any business enterprises. The aim of this management exception is to point out the significant difference between that expected and budgeted, and whatever your budgeted amount. Okay, expected and the budgeted amount. So it's happen when the company control and alter the management of the expenses that are beyond the desired amount. So the management, the primary function of the management by exception is to what they have to control. They have to the basic is they want to control. Okay, so option number D is correct over here. Next question: X and Y are partner and the share profit of a ratio is 4:3. Okay, they admitted X partnership and give 1/3 of in the profit and loss if the Z receive the share from the X and Y. So what will the new profit sharing ratio? Okay, so how do we calculate it? Just there is an old, that is X, and Y's old ratio is given, that is 4/7 and the 3/7. So what is happening? They share the 1/3. That means from the 1/3, what is remaining? That is 2/3. Okay, so from this 2/3 share, 1/6, they admitted Z is partnership for the 1/3 of the share in the profit and loss account. If Z receive the his share from the X and Y's equally. Okay, they receive the share equally. So what we do? He get a 1/6 of share equally from the X and from the Y. Okay, so the question is about the share of Y in profit and loss in future will be. So what will the ratio of Y? Is asking about only the Y's ratio. Okay, so how do we calculate it? So you know that the Y's ratio is old ratio is 3:7. Okay, and his um they are equally, they are will raise the 1/6 from that. And how, when we calculate it, we will get 18 minus 7 in numerator and the 42. And when we solve it, it will be 11 by the 42. So where is 11 by 42? So option number A is correct over here. Clear? Now, the first industrial policy of independent India was announced in 1957, 2004, 1947, and 1948. So what will the right answer? This is factual. That is 1948. What is the first industrial policy of India? Okay. The first industrial policy of India was announced in 1948. Okay. And it is this policy was announced by the post independent in the 1940, and it was presented. Who present this policy? Is presented by the Dr. Shama Prasad Mukherjee. Okay, Dr. Shama Prasad Mukherjee is the industry policy of Indian independent is announced by the actually it's presented by the Dr. Shama Prasad Mukherjee. Clear? And when? In the 1948. Okay. Next question. Break even point BEP is a point where profit and loss are equal, no profit, no loss, and profit are higher than the loss, and the loss are the higher than the profit. So you know that where is a break-even point? That is, this is a point when the sales and demand touch. Okay, so it is a break-even point. So here is break-even point in the economics, business, and especially in the cost accounting. It is a point at which our total cost, not our total cost is equals to the total revenue. Whatever the cost we have expensed, that is equals to their revenue. So it's even. In that case, no profit, no loss. Okay. So option number B. Now the accounting standard in India are issued by central government, state government, institution of charter accountant, or the RBI. So who is the who is issue the accounting standard? So you know that in the institution of the chartered accounting. Clear? Now the next, the advertising expenses done on launching of new product are treated as capital expenditure, revenue expenditure, deferred revenue expenditure, and none of the above. So advertising, when we expend, we're expending the money on the advertisement. So it is kind of, it is a heavy advertising. So heavy advertising expenses for launching a new product is a deferred revenue expenditure. So option number C is right over here. The advertisement expenses is a deferred for the new product. For the new product, it is a deferred revenue expenditure. Next, which is not the element of the market mix. Yeah, this is a homework for you. Okay, the next question. Next question, that is if the original cost of machine is a 1,26,000 and its scrap value is 6,000, what will be the amount of the depreciation for uh, second year by using the WDV method? So here the question is, if the original cost of machine is 1,20,000 and its scrap value is 6,000, what is the amount of depreciation? So from the original amount, we have to depreciate the amount, and you have to calculate the 2 year of depreciation. So this is also a homework question for you. So you can reply in the question, and I will explain it in the next video. Clear? Now the interest on loan is allowed to the partner where there is a no express agreement, okay, between the party to this effect, and also partnership did does not have any provision. Option number A, no interest will be allowed. Option number B, allowed interest at the rate 12% per annum. Option number C, allowed interest at the rate 6% per annum. Okay. So what will be the right answer? You know that interest on loan allowed by partner where there is no express agreement between the partner, okay, to the effect in the relation in the partnership did it does not have any provision. In that case, they have to allow the interest of 6% per annum. This is the 6%, okay, this is the 6% per annum. So the C is the right answer. Next question, which of the following is not an essential feature of the company? Separate legal entity, perpetual succession, common sin, and unlimited liability. So yes, it's not essential. That is a unlimited liability. So the option number D is right over here. You know that in a company is voluntary association of a person and recognized by the law and having the distinctive name, common seal, and forms to carry on business of the profit with the capital division into the transferable share and the limited liability and the corporate bodies and the having a perpetual succession. These are the essential features of the company. Okay. Now, next question. Calculate the BEP in unit from following figures. Selling price rupees 50 units. Okay. And the variable cost is given. And we have to calculate variable cost. Variable cost is given, then the fixed cost is given, and the unit produce is given. So break even point, we have to calculate the break even point. So what is the formula of the break even point? You know that fixed cost divided by the contribution per unit. Okay, so either fixed cost divided by contribution per unit. So what is the fixed cost? That is a 14,000. Okay, so contribution per unit, that means from the selling price per unit we reduce the variable cost. That means from 15 we reduce 18. So what will be it? It is a 7. So 7 is our contribution per unit. Okay, this is per unit. Yeah. So when we solve it, we will get 2000 rupees. Okay, so the option number B is right over here. Simple question. Which of the following goods is likely to have the perfectly inelastic demand? Perfectly inelastic. So luxurious car, salt, cabbage, and the sugar. You know that perfectly inelastic, when it is, where it will be perfectly elastic, when then the diagram is like this. Okay, so it is a perfectly inelastic diagram. Okay, so what is happening over here? The quantity is same, but price are with the price are changing, still the quantity is not changing too much. Okay, that is a perfectly inelastic. That means this is the best example of the salt. Salt is the, because if the price is this is the normal price, if the price is increases, quantity still will be same with the people who consume the quantity. Okay, they do not change. The demand of the salt in the elastic is because irrespective of the change in price, the demand for the salt remains same when in the same when the price is changing. Okay, so that's why the salt is right answer. And the car is perfectly is a highly is a elasticity, having a elasticity of demand. Okay, that means E is equals to greater than 1. Cabbage is also having elasticity of demand. Okay, and the sugar is also. Next one. Next one. In short run, when the output of the firm increase, it average fixed cost increase, decrease, remain constant, and first decline, then started rising. So what is it? In the short run, when the output of the firm increases, okay, its average cost is decreasing. Okay, so option number B is right over, because in the short run, when the output of the firm increases, okay, its average cost curve decreases, the fixed costs remain constant and irrespective of the number of output produced. So the increase in output, the fixed cost contribution decreases per unit. Okay, the fixed cost amount amount is must is will be same, but the per unit amount of the fixed cost is going to be decreases if I am increasing if the company increases his output. Okay. So that's why the fixed cost, average fixed cost is decreases because the company, what a company is doing is increasing his output. Okay. Next, in which of the following market structure a firm has a very larger degree of control over the price fixation product? Okay. So monopoly, perfect competition, monopolistic competition, and the oligopoly. They are talking about the market structure of very large degree of control, in which have the large degree of control in the monopoly, because the only single seller in the market who dominate the position in the market. Okay, so that's why the monopoly is right answer. Next, the concept of liberalization, privatization, globalization was introduced first in Indian economic in the year. It's introduced in the 1991. Okay, and this is a new. This is introduced in the new economic policy. Okay, this is 1991, which is introduced in the new economic policy is 1991. In this they introduced the concept of liberalization, privatization, and the globalization. Next question, out of the following which is not the basis of a market segmentation? Demographic segmentation, benefit sort segmentation, lifestyle segmentation, price segmentation. So what will the right answer? So we having a demographic segmentation. Okay. We having the benefit sort segmentation. That is benefit sort is related to your psychographic. Okay. It's okay. Then the lifestyle. Lifestyle is also lifestyle is a psychographic. Okay. It is a psychographic. Okay. It is a psychographic. So, and segmentation and price segmentation. Do you see the unique price segmentation in the market segmentation? No, the price segmentation is not the basis of the market segmentation. Okay, so the benefit segmentation is a what is this benefit segmentation is a technique that segment the customer on the basis of their desire. Okay, or their sought benefit. Okay, and demographic segmentation, it's according to their age, sex, and the income. Okay, so income. So this is a demographic segmentation. Clear? Now next question, that is penetration pricing is initially low pricing. We have discussed in the last video. Next, the main pattern of the international trade is IMF, World Bank, WTO. So what will the and IDA? So what is the right answer? The main pattern of the international trade. What trade organization? So the option number C is right. That is the World Trade Organization. WTO is an international organization whose primary purpose to open the trade for the benefit of all. Consumer Protection Act India was enacted in 1986. Okay, so Computer Protection Bill is passed in 1986, was passed by both the House of the Parliament. Okay, and received the assent of the President in when 24th of December in 1986, and it is comes to the statute book in the Consumer Protection Act 1986. Okay, next question, total revenue is equals to price multiplied by quantity, price multiplied by income, or income multiplied by quantity, and none of the above. You know that total revenue is equals to price multiplied by its quantity. So the option number A is correct. Next question, stock exchange is an example of regulated market, unregulated market, spot market, or the unrecognized market. So the stock exchange is a regulated market. Okay, so the regulated market is a market over which government bodies or the less commonly industries or the labor group experts a level of oversight and controlled it. So the stock market is controlled, it's regulated. Okay, so it is a regulated market. Clear? Next, which of the following is not a condition of the perfect competition? A large number of the firm, the perfect mobility of the factor, price is determined by the industry, not by the individual firm, and the individual seller buyer can influence the price in the market, not a condition of the perfect market. So you know that what is the condition? They having large number of firm. Yes, ma'am. And the perfect mobility of the factors. Yes, they can perfectly get entry and exist. The free entry and exist. And the price determination by the industry, not by the individual. That means the perfect competition is a price taker, not a price maker. And the individual price, individual seller or the buyer can influence the price. No, ma'am. So option number D is right over here. Okay, they are a price taker. How they influence the price of the market. Now, the most important function of an enterprise is to innovate, financing, and earn profit. So, what will be the right answer? That is the most important function. Is the most important function of the entrepreneur is to innovation. It's a most important function of the entrepreneur. Okay, now the oligopoly market is characterized by a few dominant firm and the substantial barriers to the entry, a large firm and no entry barriers, a large number of the small firms and no entry barrier, and one dominant firm and no entry barrier. So you know that in the oligopoly there are the few dominant firms and the first substantial barriers in the entry. Okay, so the oligopoly market is a market structure where the few firms and there are lots of barriers in the while entering in the market, because they need a huge investment. Okay, like for example, I have given it when I discuss the economics full crash course revision. That is, whenever you read the oligopoly, you have to keep in your mind the example of the airline. Okay, airline. This is the best example of the oligopoly. Clear? So the option number A is correct. Sample is representative of universal investigator data. So you know that sample is a small portion of the population. So to representing this population, we collect the sample to represent the whole population. And here's the population word is not used. That means it is a universe. Okay, it's applicable to the universe. Okay, so the option number A is right over here. Next question. That is the SEBI, which was accorded the statutory status in the year 1992, act as a regulator of. Option number 1, stock exchange, which comes into the being in and after the 1992, the stock exchange, which are known as the over the counter exchange of the India, and all the stock exchange of the country respective of their date of the coming in the beginning. Okay, so what will the right answer for this question? You know that the SEBI, Security Exchange Board of India, which was accordance with the statutory status in the year 1992. Okay, and act as regulating of all the stock exchange of the country, irrespective of their date of coming in the beginning. Okay, so the option number C is right over here. Now the next question, which one of the following is not the form of merge of the company? Option number 1, vertical. Option number 1, horizontal. Option number 2, vertical. Option number 3, diagonal. And the conglomerate. So you know that which one of the following is not the form of merge of the company. You know that the company can merge in the horizontal level. In the horizontal level, that means in the same level. Okay. And a company can merge in the vertical level, that is top to bottom level, or either you can say in the famous company to less famous company. Okay. Or the conglomerate means there is a conglomerate merge is also involve the company in the related to the line of a business, while conglomerate merge do not. Okay, they do not going to be merged. So and the diagonal is, this is not a kind of a, this is not a kind of, D is the right answer. This is not a kind of merge of the company. Clear? Next question, that is 135. Positive perfect correlation is, you know that, that is +1. Next question, tools, where it is, yes. Question, the tools for collecting the primary data, that is tools for collecting primary data, interview method, observation, questionnaire. Yes, these all the collection of the primary data. These are the source of collection, the collecting the primary data. In the interview method, we can face to face collect the data with our with the people. In the observation, we observe all the general public. In the questionnaire, we just give the questionnaires to fill the question, or either we ask the question and we have to fill the questionnaire. So this is all the primary data. The next one, the contingent approach of the leadership was developed by Fedler, Likert, Benchard, Harsey. So who is that? The contingent approach of the leadership. Contingent approach of the leadership. Contingent approach of the leadership is the is developed by the Fedler. Is developed by the Fedler. Okay. In which is developed in which year? In 1960s. Okay. Or who is by the Australian. Who is a federal? Federal is an Australian psychologist. Is an Austrian psychologist. Okay. And the professor, he is also an professor in Federal. Okay. So he's a professor also, and in when he the contingent approach of the leadership is they are developed by the Federal on the 1916. Clear? The market concept is the production oriented, sell oriented, customer oriented, and the seller oriented. So you know that marketing concept is related to customer oriented. Next question, marketing is a delivery of a standard of a living. Is a definition of the marketing given by the marketing is a delivering of the standard of the living is given by whom? Is given by the Paul Mazur. Okay, Paul Mazur. So the Paul Mazur defined that the delivery of a standard of the living of the society. Okay, and he is also a professor. Okay, and he is a professor in Harvard University. Okay. Yes, the marketing, and also he also defined that he delivered the marketing is a delivery of a standard. He also defined that marketing is the creation and delivery of standard of living of society. Okay, so it's also given by the Paul Mazur. Okay, next question, which so option number C is correct. Okay. Now the next 140, the object of the financial management is what? The profit maximization, wealth maximization, both profit and wealth, and none of the above. So you know that in the financial management, they need a finance. So the profit is also comes, and they also have to, they want to increase their wealth. So that's why the profit and wealth maximization both is correct. So C is correct over here. The next question, the NABARD was established in the year. I have already told you in the last video, that is a NABARD was established in in 1982. Where? In the 1982. And when? In this 12th of July 1982. Okay. What they do? They transfer the agriculture credit function of RBI and refinance the function of them and agriculture to then to the ARDC. Okay, so the ARDC is Agriculture Refinance and the Development Corporation. What is it? Is a Agriculture Refinance and Development Corporation. The net working capital is equals to first excess of total asset over the total liability, excess of current asset over the current liability, excess of aggregate asset over the firms, and excess of total asset over the total current liability. So option number B, you know that net, you here you have to understand what is a working capital. Working capital is a total current asset. What is it? It is a total current asset. And what is a net working capital? Net working capital means current asset minus current liability. So here is an excess of current asset over the current liability. Is the right answer option number B. Clear? Next question, that is the immediate product of job analysis is job evaluation, job description, job specification, and job enrichment. So the immediate product of immediately we will get it is a job description. Okay, so job description, it is the immediate product of the job analysis process. What is it? The data is collected to the job analysis provided as a basis of a job description and job specification here. So the immediate product we will get from the job description. Clear? The next question, the two factor method, two factors of the motivation was propounded by Herzberg. Okay, so it will be in your tip of tongue. Okay, so the two factor theory of the motivation was propounded by the Herzberg. Okay, and the sub things we have to, that is the two factor theory was a yes, it is a motivation. Two factor theory of motivation was propounded by the Herzberg in 1959. When? It is 1959. And what he do is the behavior scientist proposed a two factor theory of motivator hygiene theory. Okay, what is hygiene? Hygiene theory. Okay, hygiene theory. Clear? Hygiene theory. Clear? So the option number A is correct over here. Now the next question, the Environmental Protection Act in India was enacted in the year. So in which year the Environmental Protection Act is enacted? In option number D, in 1986. Okay. Next question, the number of the element included in the development of the marketing mix for the for service are the number of element included in development of the marketing mix. Okay, so how many? There are the 7. Okay, 7. There are the 7. That is D is right over here. You know that in the traditional marketing mix element there are the 4 P's. Okay, 4 P's. These 4 P's are um, 4 P's as product, price, place, and promotion. Okay, but after that they include 3 more. Okay, so 3 more. What is that? People, physical evidence and process. Okay, so the number of element included in the development of marketing mix, that is a 7. That is 7. So 4, this is 4, and this is 3 piece. So it is a 7 piece. Okay. Next one, that is, out of the following, new partners could be admitted in the partnership with consent of all the existing partner, any of the partners in the firm, majority and the two-thirds of partner. If the new partner want to admit it in the partnership, he must have the consent of all the existing partner. Okay, and this is given in the Partnership Act 1932. The new partner can be admitted in the firm with the consent of all the existing partner unless otherwise agreed upon. Clear? Next question. Identify the correct one. The NABARD was established in order to provide a credit for the promotion of the activity like rural, craft and agriculture. Yes, because NABARD is for the rural craft and agriculture. NABARD was set up in order to provide a credit to the poor section of the rural India. Yes, ma'am, because it's a provider a facility to the rural area. NABARD was set up in order to assist the bank, especially meant to the serve the rural India. Yes. So all of the above is right answer. Clear? So here you know that the NABARD is established in the 12th of July 1982. Clear? Again, I am repeating that. And what is the full form of NABARD? National Bank for Agriculture and the Rural Development. Again, I am repeating National Bank of Agriculture and the Rural Development. Which of the following is reason was not possible for the establishing of IMF? Okay, or IMF. So to first, that is A, to achieve the exchange rate stability, to assist the member countries to post-war reconstruction, or to help the member country to finance. Okay, finance the short-term balance of the payment of the deficit, and all of the above. So what is the role of IMF? That is International Monetary Fund. International Monetary Fund. Okay, so this is International Monetary Fund is for to assist, to help the member country in the post-war reconstruction. So the option number B is correct over here. They not achieve the exchange rate stability. They do not have. They help the membering country to finance the short-term finance of the BAP. No. Okay, they just want to help. They just want to assist to the for the post-war reconstruction. Clear? So thank you so much. We have completed again here the 50 questions of the basic. So hope you are preparing well. So all the best to all of you.